Hello Internet, thanks for joining me today. We are talking Sinclair Broadcast Group, ticker SBGI. Before we get started, as always, subscribe, like, comment below. I would absolutely appreciate it. So, who is Sinclair Broadcast Group? Well, you may know them without knowing them. They are in 81 markets across 44 million TV households. And more specifically, not one of these markets represents more than 5% of their revenue. And they have a very large affiliation with Spanish language networks as well, which is a growing industry in the West. I say all this because the small cap size of this company, just $3 billion. If we dive into who they are and what they're good at, we can see on the right side middle a comparison of 5-year total returns. And Sinclair is not only beating the telecommunications and media sector, but it's beating the entire market itself, pretty handedly in fact. And this is despite some ups and downs. And currently we are inside of one of those downs. The PE on this company is currently just in 11, where the industry PE sits at a 22.2. And that's just really good. Now with that said, I have called out the debt to equity there at 3.62 as a potential caution sign. And here on this screen, we can see it really stands out, the cash versus debt. And most of that was spent towards acquisition and territorial expansion. Again, caution sign to investors. Our current ratios, I mentioned before, PE extremely low. The price to earnings growth is just a 0.3, which is fabulous. And the price to book sits right in line with everybody else. Analysts see this as an undervalued stock at $30.55 with a future cash flow value of $51.74. In the top right corner, I've shown their dividend history since 2008, and you can see with the exception of a ridiculous spike, it has settled pretty nicely at a 2.36 across the board and just a 25% payout ratio. So really great ratios across the board is what I'm trying to say here. To dive into one ratio specifically, the net margin, here I can see profitability and growth in general. Across the entire spectrum, we're seeing pretty strong green symbols. And then when I dive into the net margin compared to its local competitors, we'll call it small cap communications companies, not only is their net margin second best to gray, but their market cap is beating all the relative ones. So this leads me to feel more secure in this company. The fact that they can pop out a 9.7 net margin on just a 3.18 industry median. That's absolutely fabulous, as you can see on the screen. If we were to dive in a little bit more into those earnings, we would see it's actually a little rockier than it seems on the screen before. So I dove into what exactly causes this tide-like effect. And it turns out to be political spend in campaign years. And so for what it's worth, I have the distribution of channels in the bottom of the screen here. And then I have the political and non-political spend and how it relates to their total national revenues. And you can see in years with campaigns, there's a considerable spike in the political spend. In fact, it's roughly 10 to 1, over 10 to 1 this last political campaign. So if I were to speculate, political campaign and spend is likely to continue to grow year over year. And I just want to remind you that the midterm elections are sneaking up quickly. So my final thoughts around this, well, Sinclair Broadcast Group, the PE, the price to earnings growth, the price to book ratios all indicated that the stock is underpriced at its current share price. To show you what the analysts think, Zacks has it as a 2, and the analysts have shown some variance. But going forward, they replicate that tidal effect that we had seen, and we can see that 2019 is going to be an uptide. This positive guidance and outlook comes from the strong tailwinds we discussed, the political spend we discussed, but also the fact that Sinclair Broadcast holds the first or second highest viewed local news program in every market segment they cover. So not only are they expanding, but they're expanding and they're taking market share from that competition. The media sector, despite competition and cord cutting, continues to adapt and will have a surplus of income during this mid-election season we referenced. And of course, that excellent dividend of 2.36% outperforms the sector itself, which is just a 1.71. Sinclair is currently part of my portfolio. It is 8% roughly of my portfolio. And I encourage you, as always, to do your own research before making investments. And feel free to ask me any questions or share some comments down below. I'd appreciate a subscribe, like those comments I just referenced. Any feedback you give me is feedback I can use to make a better channel for you. Thank you so much for your time.